Okay, thank you very much for attending. We'll wait just a few moments here and I'll speak about a few things as people are logging in. I am recording this, so if for any reason you need to leave a little bit later on and you can't make it through the entire presentation, you can go back and watch the replay. So if you type in a few questions now, what I'll do is wait until after the presentation so I can get through all the material. What I've noticed is usually people have like a really limited amount of time to watch the videos and they really want to get right to the heart of whatever it is that I'm going to be sharing or the educational part of the webinar. And then they make a decision later on to decide to stay through the question and answer session. So I'll do a question and answer session at the end of the presentation, but I'll just work through the material. So if you type anything, any questions as I'm going along, and if I don't respond to them, please know that I'm not ignoring you. I'm just trying to get through the material as quick as possible, and then I'll answer all of those questions at the end. Okay, so I'll go ahead and get started. Again, this is being recorded. So we're going to talk about the best way to trade Forex for 2018 and how to create a hands-free trading system that works on autopilot. This is a hands-free trading system, but it's basically me trading for you. So I'm going to explain to you my trading strategies, my system, how I put it together, and how profitable it is, and then some of the results that it has actually helped my subscribers achieve. And then you can decide if you want to use it, but if you use it, it's very simple. Once you connect the trade copier to, or your account to the trade copier, you're basically done. You don't have to execute any trades. You can go on vacation, you can leave it there for a whole year, 2 years, 3 years, whatever, however long you want, and I will be trading for you. I plan on trading until I can no longer see the charts, as I often say. So let's go ahead and get started. I think we're just about ready, and most of the people that are going to attend are here. So please understand this before I continue. My results are not typical. And when I talk about making money, I'm not implying that you or anyone else will achieve the same results. And when I talk about my clients and my subscribers, please know that their results are not typical. All business entails risk. And when I show you numbers later on, they're to illustrate the power and the potential of this trading system, the one that I developed and the one that I used. And in no way am I implying that the scenario that I describe in this webinar or in any of the videos on my website will actually happen to you or anyone else. Now I say that because it's very important for you to understand that it's easy to watch a video, maybe on YouTube or somebody's website, and then, or even attend a webinar, and then think that maybe you understand the strategy. I mean, you kind of understand what the person's talking about. Maybe you're doing something similar to what I'm going to share with you today. But if you don't have all of the details, if you don't know what's going on in the background, so what leads into creating or developing that particular setup, there are some variations. So for example, in this presentation today, I'm going to explain to you and share with you my best trading technique. The one, it's called the continuation breakout trade. And it's the one that creates and generates the biggest profits for me. You're most likely not going to master a technique just by watching a video for a few minutes. You really have to get the experience of knowing how to apply it in specific conditions. So how this webinar is different than others. I'm obviously going to make an offer at the end of it. It involves working with me and having me trade for you. But the information in this webinar is how-to material. I am going to show you how to do some things that will help make your trading easier, specifically showing you one of my trading strategies, the best one that I enjoy. This one, it was actually my first technique. I love trading this technique. I love it when it sets up perfectly. I know I'm going to make a lot of money. I'm going to share that with you. And then I will also, after sharing it with you and showing you how it works, I will also offer to help you with it to make sure that you succeed if you decide to use this system. Now, I'm also going to talk about my trading strategy, how it works, what time frames I trade, and which currency pairs I trade. I'm also going to talk a little bit about my history as a trader. Now, when I developed my trading system, I didn't want a system that would only work for a short while and then stop working. So I wanted an easy to use, easy to verify step-by-step system of a way to identify a trade and then confirm that trade and then execute the trade with the same profit and stop loss expectations every time. And what I mean by that is something that I can duplicate. So when I developed this continuation breakout trade, that's the one I'm going to share with you today. It's the breakout strategy, the continuation breakout trade. That's what I call it. What it is a breakout of consolidation, and then the continued trend that develops in the same direction of the breakout afterwards. But there's ways to confirm and make sure that it's going to be a breakout with the trending move that resumes after the breakout. Otherwise, it could be a head fake. And I have ways of knowing if it's going to be a head fake or if it's really a valid breakout trade for me to get into. That's what I was looking for. But I wanted to be able to duplicate that over and over again. In the beginning of my trading career, I started to follow other systems and other methods, and it didn't seem like they had a very, very structured way where you could actually list it on a paper or a checklist or something like that, where you can go down the list and know that you're going item by item, making sure that everything's in place to confirm it and then trade it. And I know how far my take profit levels are based on each one of the strategies that I used. And I was able to calculate that. I had to calculate that, like the distance from my entry to the take profit level. For me to be able to do that over and over again and have it work year after year, month after month, and all these years, I had to measure and calculate how far price usually goes after a breakout, taking into consideration daily average trading ranges. So there was a lot of research, and then there was a lot of testing. And I tested it with my real live trading account. I don't recommend doing that if you're trying to develop your own trading system. I recommend testing it out on a demo account. But I don't want to say unfortunately, but I need to share that with everybody that I actually did that. I jumped right into a live account, and I lost a lot of money as a result of doing that. And I don't recommend doing that. But that is how I developed my trading system. It was based on real market experience with real money. Now, the journey to become a successful and profitable trader, it's not easy. We all know that. That's why you're here if you've been trading for a while. So I studied night and day, even on the weekends. Even on the weekends, on Saturday and Sunday when the market was closed, I would open up my charts and start moving one candle at a time. And I would role play the previous week's price action and test and practice my strategies over and over. I couldn't stop doing it. I did that for years, like literally years. And I would journal everything in a written book. I would write everything out. And then I had a video journal, and I would just continue this process. I was like obsessed with it, and I was scientifically testing these strategies all of the time. Even in my sleep, I would think about these trades, and I would wake up in the morning and I would run straight to my office and turn on my computers and start. I would just go right back to work, even on the weekends. So I've invested over 78,000 hours into my professional trading career. And it seems like there isn't a week that goes by when I do not learn something new. I love trading. It's just an amazing experience to make money from wherever you are at that moment. Trading for a living is one of the greatest opportunities, and I want you all to experience that too. Now, I know exactly what it feels like to buy lots of books, to be misled in the beginning, or to not have enough experience to know if you're actually even using strategies and methods that will even work. I bought lots of books, lots of courses. I joined a lot of chat rooms, trading signal subscriptions. I did all of it in the beginning. And all of them failed miserably for me. But I have to admit that I had a very limited amount of experience. So using some of those, it's possible that some of those books or courses or chat rooms or trading subscriptions, if it was a live chat room where they were calling out trades, I did what they told me to do. And most of them, they were bad. I mean, every one of them I used was bad. But most of the trades that they called out would fail. So in that regard, I was doing what I was supposed to do. But as far as the books and the courses, if I was learning a strategy, I didn't have enough experience to know if I was even applying those techniques right anyway. And that frustrated me. So that's what caused me to keep on moving and looking for the next shiny object rather than stay focused on one technique. And it didn't really work for me until I just stopped all of it and started doing it myself. So I spent $2,000 on a home study course. This was back in 2001. It consisted of nothing more than what I consider free education. I see it all over the blogs and websites and things like that for free. In the books that I was renting from the library, the bookstore, I was buying books from the bookstore, all of it. All of this basic textbook knowledge I consider free education that textbook knowledge, that's what was inside of this $2,000 trading course. It was 17 manuals, 17 CDs. I received it on a Friday. I went through all of the material on my laptop and I was done by Sunday. Now, I'm in California. The market opens for trading at 2 o'clock in the afternoon, 2 p.m. California time. That starts the beginning of a new week. And at 2 o'clock Sunday, I did not have a trading system in place. I didn't know what to do with the information that I had purchased for $2,000. I panicked. I was angry. Like, I didn't know what to do because I still didn't have a strategy or a system that told me precisely when to get in, where to take profits if I'm going to execute this particular technique, and what time frame to use it on. I didn't have any of that. This $2,000 course was all about moving average crossovers and how to do the ABC price swing and use Fibonacci tools. It was all the basic generic stuff, but it still didn't tell me when to get in, where to get out, where to put my stop. It was horrible. Like, I panicked and I didn't know what to do. I thought, what did I just do? Like, now what? So going through that process, I was angry. I was desperate. So what made the difference for me, and I mentioned this just a moment ago, I stopped. I stopped buying books. I stopped renting books at the library. I stopped buying courses online. I canceled out of the chat room that I was in because I was losing trades as a result of their trade calls. And I committed myself to understanding how the markets work. And I developed my own trading system. Now, most people don't get the opportunity to do that, to spend all of their time trying to figure out how the markets work, how to develop their own trading system. Most people have full-time jobs or operate a business. As I mentioned, I basically locked myself up in my office and I worked 7 days a week around the clock to build my trading system. Now, I've estimated that it cost me over $300,000 in real money losses to figure all of this out, even the material that I'm sharing with you today. Now, of course, I made money during that $300,000 losses. Otherwise, I wouldn't have been able to stay in this business. But it can be a very expensive process to learn to trade or try to develop your own system if you don't know what you're doing. So who this webinar is for: if you trade on your own and you're still struggling to earn profits, if you've been trading for 6 months, 2 years, 3 years, 5 years, 7 years, 10 years. I have subscribers that have been trading for 5 or 7 years and they still can't see consistent profits. They just keep doing the same things over and over again, even the same things that don't work, but they don't know what else to do. This webinar is definitely for you if you're in that situation. If you're tired of using countless signal services, trade copier services, and trading courses that don't work for you, this webinar is definitely for you. If you simply don't have as much time as you would like to trade your own account full time, this webinar is definitely for you because this is a hands-free trading system. If you would like to see consistent monthly profits every month that you can withdraw from your trading account to pay your bills and then still leave enough money in your account to see growth so that eventually you can add a few more lots to it in the back end. You can keep growing and scaling up your business. This webinar is definitely for you. And if you've been trading for a while and you still can't make a living from trading, this webinar is definitely for you. Now, the main objective is total transformation. I want to help you achieve outstanding trading results. I want to help you earn as much money as you feel you're worth and to achieve your financial goals. And I want to help you reduce your trading business to total simplicity. I want to help you make trading fun again. Trading really is fun. I went through a time where initially it was fun. I started making some money, but I didn't even know what I was doing to make that money. I tell the story that my first week of trading, I actually was trading futures. I opened up an account with PFG. They're no longer in business. And one of my first trades, I made $325. I just bought because price was moving up. I didn't have a strategy. I didn't know where to put my stop. I didn't even know where to take profits. The only reason that I earned the $325 real dollars was that I saw $325 in my account and I went, no way, this is awesome. And I closed the trade. That was it. But I tried to duplicate that the next day and it didn't work. I lost money for the rest of the week because I didn't have a strategy. And then trading was no longer fun. Trading was all about panic, fear, anger, resentment, humiliation. I didn't want to talk about it with family. It was a mess. But today, trading is very fun. I love trading. I love the idea of trading and understanding what is going on in the world today that could possibly have an impact on my trades. It's an awesome experience. It's investigative work. It's great. And it can be fun for you, again, if you're experiencing pain, frustration, fear. It is fun. I want to help you make trading fun again. Now, who am I? I started trading in 2001. I began trading futures, and a few months after that, I found out about Forex. So I started trading Forex. My first account with Forex was with FXCM, and I've been trading both ever since. Now, I trade many things. I trade futures. I trade oil, gold, silver, index futures. I trade cryptocurrencies, and Forex. So Forex is my primary focus, and I just love Forex. I've suffered the same experiences that most new retail traders do. And again, ultimately, I had to stop following all of the services that weren't working for me, and I had to figure it out all by myself. So it took me about a year to a year and a half to start really seeing consistent results. This is back in 2001. Results that I could actually live off of. And I'm talking about being able to send home money, pay all of my bills, and still leave enough money above what I had opened up my trading account with to experience growth, and then eventually a month or two down the road, add another lot. Now, I started trading standard lots right away. I had a pretty sizable trading account, and I just sold a business prior to becoming a trader. So a standard lot on the euro dollar is like $10 a pip. So this technique that I'm going to share with you today, it's a continuation breakout trade. When I trade it on the euro dollar, it earns 55 pips. The same thing with the pound dollar. So 55 pips times $10, I'm making $550 on that single trade by itself. So quickly, in one trade using this trade copier, it will pay for the cost of the service. It's that profitable. Of course, if you're using and trading standard lots. Now, I developed my entire trading system on my own. I didn't invent, of course, the indicators, but I pieced them together. I learned about them, and I learned how to apply them to my system that gave me a precise entry, precise stop loss, and precise take profit level. In 2005, I started my own small managed fund. It was a lot easier to start managed funds back then. In 2010, the government changed. There was a lot of changes after the global financial meltdown, and they made it a lot harder for people to open up managed funds. But as I started making money from my trading, from 2001 leading up until 2005 and then beyond, my family and friends, they wanted to know what I was doing. They were always asking me, teach me to trade. I want to know how you're doing this. This is really cool. I've seen like everything change for you. I want to be able to do that. I want to be able to work from home. So I started a private instant message group on Yahoo. And that ultimately led into my first chat room that was open to the public with a website that I created in 2007. And I've been teaching and coaching and providing trading services like the Trade Copier since 2007, and I continue to this day. So this is what we're going to learn about today on this webinar. I'm going to show you my best trading strategy. This is the continuation breakout trade. It's the one that I use for day trading breakouts. And when I say day trading, this technique can actually be used on the 4-hour and the daily charts for swing trading, but I personally prefer to day trade. I like to day trade. And I like to get in and get out and try to earn profits in that same day or within that same trading session. Now, I do realize that sometimes the market's just going to go flat and it's not going to reach that target in that same trading session, after we see some movement. And I have to hold on to the trade maybe 7, 8, 10, 12 hours, sometimes even 18 hours. But either way, that is my primary goal, is day trading. So I execute this particular strategy on the 1-hour time frame. Now, it's very safe. It's very profitable. Very profitable. It's accurate 90 to 95% of the time. And I say that because if there's ever a mistake on this technique, if I ever make a mistake on one of my trades, I can go back and I can look at why the trade failed. That is not something that most other traders can say. Usually when they experience a loss, they'll say things like, well, I don't know, there's something wrong. It didn't work out the way I wanted it to. It didn't really hit that target. Maybe they haven't taken the time to study how far price could go based on their entry, whatever technique they're using. That's what I did. I wanted to know, how long can I hold on to a trade after I get into it? So when I developed this technique, I figured out the entry, and then I would get in and I would be profitable, and I would be up 30 pips. And I'd say, okay, well, this is cool. I want 40 pips. And then I'd get 40 pips, and I would still hold on to the trade another 20 minutes later, and I'd say, wow, this is cooler. And then I would say, I want 50 pips, and then it would go up to 50 pips. And then I'd go, wow, this is awesome. I want 80 pips. and it wouldn't hit 80 pips. It would go up maybe 60 or 70 pips, and then it would roll back down, and then I had a really good winning trade, and then it would come back down and hit my it would go back down and hit my stop. So what I realized is I didn't know where to take profits. I figured out how to get into the trade, but I didn't know where to take profits. So then I had to start measuring and calculating every day that went by, every time I executed this trade, how far could I actually expect price to go where it would hit that target and I could lock in profits before it stalls for the day and then rolls back over in some cases. That took a lot of testing. That took a lot of measuring and testing forward. I mean, it was insane. I missed a lot of family opportunities, and I didn't want to do anything else other than figure this out. It was just obsessive, but in a good way. So when I say it's safe and very profitable, first of all, I know exactly where my stop loss is every time. I'm not changing it ever, and I know exactly where to take profits. So when I get into the trade, if it's a good trade, I know I'm going to make money. And if anything breaks down there, if a trade fails, again, I can go back and I can figure out exactly what I did wrong. Did I miscalculate something? Was something off in the indicators? There's a few different ways that you can calculate that, and I show you exactly how to do that. Like I do that every time I take these trades. But the best thing about the strategy is that it has, again, the precise entry, take profit, and stop loss every single time. Every time I execute this trade, I know exactly what to do. And because of that, if the trade isn't going to work, I can cut the trade off sooner. So I say that I use, for example, in this particular technique, a 55 pip stop loss. Now nobody wants to experience a 55 pip stop loss, right? That nobody wants to take that kind of hit. And people usually would rather take, a 15 or a 20 pip stop loss. I know because I was there. I mean, I know what that feels like, but it isn't true. I mean, sometimes you try to use a 15 pip stop loss in a breakout move or something like that, and there's going to be a little bit of a retracement on the reaction of the news or something like that, and that's not going to hold you in the trade. You're going to get stopped out prematurely. So even though I use a 55 pip stop loss, it doesn't mean that if a trade fails, I have to take the 55 pip stop loss. Very often, if a trade is unraveling and it's not working out the way I want it to, I can see it, detect it, and confirm that it's not going to work and that I made a mistake. As I mentioned, I can find out why the trade isn't working and fails. I can figure that out before it even hits the 55 pip stop loss, and I can close the trade with less than 55 pip stop loss. So I'm not losing as much. I can close it out minus 17 pips, minus 27 pips, minus 32 pips. So you can see I don't need to take the hit of 55 pips on the loss. I can cut it off a lot sooner and shorter. And that doesn't mean that I'm changing the strategy. I'm not changing the stop loss placement. That's not what I'm talking about. I'm talking about actually going in and dissecting the trade and calculating and figuring out, was it a bad trade from the beginning? Once I'm in the trade, did I miscalculate something? And again, if I can see that and it has not stopped me out minus 55 pips, let's say it's minus 27 pips, then I'm closing the trade out and I know I made a mistake. So you can see, the last time I experienced a 55 pip stop loss was probably 2 years ago. Now, here's what you need for this setup. Now, I mentioned in the beginning that I was going to share with you things that you can actually take and use yourself. So I'm going to share this for educational purposes only. Remember, there's going to be some nuances and some things that you need to know more than just what I'm sharing here. I can't stuff it all into this one little short-term time frame, all of the details here. There are some different factors like knowing the right conditions and things like that. But I am going to share this strategy with you, and it will show you exactly what I'm doing with the Trade Copier service. And again, please be very careful if you're going to try and take this information and use it. Demo trade it, paper trade it first until you understand it, exactly how it works. So number one, for day trading, we use the 1 hour time frame. Don't use a time frame smaller than the 1 hour time frame. It can be used on the 4 hour and the daily. I tried it on the 30-minute when I first developed this method, and I was still seeing a lot of head fakes. And I would get caught in those head fakes because I was using the 30-minute. When I switched over to the 1 hour, it wiped out almost all of the head fakes that I was seeing. It gave me more confirmation. It is, for day trading, the 1 hour time frame for Forex is a very appropriate, solid trading time frame to execute trades. I know that a lot of people like to use the 15-minute. They think they're going to get in earlier, or they're going to make profits, or they're scalping and things like that. That's a different strategy. I'm not saying it won't work, but what I'm saying is for this strategy right here, If you change anything that I share with you, you're going to get different results. All I can share with you here today in this webinar is how I use it and why it works so well. And again, if you do anything other than what I'm saying, I don't know how it's going to turn out. All I can say is I've tested this. This is what works the best over all of these years, for the last 18 years almost. And I wouldn't recommend changing anything here. So number 2, you need to use indicators. The appropriate indicators for this strategy are the CCI and the MACD histogram. Number 3, price targets on the majors. You need to know what those are. The majors, the euro dollar, the pound dollar, dollar Swiss, dollar yen, it's 55 pips. That's the price targets. The price targets on the euro yen, or the yen crosses, and the pound yen, they're different. The price target on the euro yen is 150 pips, and the price target on the pound yen is 250 pips. And I'm not double counting here. I'm not talking about, executing the equivalent of maybe 2 lots or something like that, 2 micro lots or whatever it is that you do, because I see a lot of people do it still. And I hated when I saw it, even when I first started trading. People would use 2 lots and they would earn 10 pips on the trade from the entry to where they took profits. But because they used 2 lots, they would double count and they would say they earned 20 pips. And that's not fair. I hate when people do that. I'm talking about from the entry to the take profit level, the prices and the price numbers that we see on on the charts. That's what I'm talking about. I am not double counting here. So when I say that the pound yen, if you use this strategy, will pay 250 pips, I'm talking about 250 pips from where you get in the trade, the price level on the charts, to where you take profits and close that trade on the charts. Not double counting or anything else. It is 250 pips. It's an amazing opportunity when you see 250 pips and these trades work out like that. And I do execute these trades like this with the trade copier. So you absolutely have to wait for the candle on the 1-hour chart to close before considering or analyzing the continuation breakout trade. If you get into the trade while the candle is still open and it's taking out a high or a low, that could lead to a head fake. How many times have you saw price, it's like you're looking at a 1-hour chart, right? Each candle is 1 hours and it's, let's just say, for example, 1042. And you see price taking out the high, the previous high of consolidation, and it looks good. And you think, wow, this is going to close above that high. So I'm going to go ahead and get in right now. And then you get into the trade and you walk away, or you stop looking at the chart for a little bit, or you blink your eyes, or you're sitting there staring at it. And by the time that candle closes at 11 o'clock, 20 minutes later, or 18 minutes later, the candle drops back down inside a consolidation, and now you're negative on your trade because it didn't continue to go any higher. And that's it. It closes below the resistance point. So it's not a breakout. That's what I'm talking about. I used to get into trades when candles were open and live and moving, and that, when you look at that, when you see that, you think to yourself, okay, I've got to get some of this. It's moving. I don't know where it's going to stop, but I'm losing a lot of money by not being in this trade. That's not the way to think. Don't think that way. I'm all about confirmation. You're going to get plenty of opportunities waiting for confirmation. So relative to whatever time frame you're using with whatever strategy, one of the things, a tip that might help you is wait for the candles to close. You might find that you'll make fewer mistakes as a result of waiting for the candle to close. That's what I did. So I have to wait for the 1-hour candle to close before I make a decision. Once the 1-hour candle closes and I have confirmation that it is a true breakout, then I need to look at the indicators and confirm that all of them are lining up in the right way. There cannot be any divergence in any of the indicators. The biggest factor in confirming this trade correctly is the ability to identify consolidation. Consolidation is subjective. Everybody looks at it in a different way and they'll think, well, why doesn't that high prove to be the consolidation, the high of the consolidation? Or why doesn't that low? Well, how come that's not the appropriate support or whatever? There's so many different ways to look at consolidation. And that was where I started. I needed to quantify consolidation. I needed a way to measure it, and to not only measure it, but where I could move forward. So tomorrow, if I find consolidation, based on the criteria or the metrics or the factors that help me measure that consolidation, I can apply it to tomorrow's consolidation range. And if it doesn't fit, then I know it's not going to work. Again, you can just see how much testing was involved, because that's like a big, like, where do you start with that? Especially if you're looking at a really choppy, and then you don't know which time frame to use. So all of that went into the testing. So I have determined that for me, using this consolidation strategy, this breakout, the consolidation should be in place for at least 7 to 8 hours. That's approximately one trading session. If it's any less than that, it could lead to a head fake. And the range from the high to the low should be larger than 65 pips. Sometimes the ranges from the high to the low are 35 pips, 40 pips, and then you get a 1 hour candle that closes outside of that range. Even if the indicators confirm, but the range is too tight, very often what will happen is the next candle will go right back down inside of consolidation. So that range of consolidation was too small to qualify for a legitimate, in my opinion, consolidation range. Now, yes, you could go down to a smaller time frame. I know people have their own strategies. I'm talking about the way I use this strategy, because that's all I can share with you is how I apply it, how I use it. And then according to the movement on the 1 hour time frame. This is important to prevent head fakes, because again, the signal candle can confirm a breakout and the indicators can confirm that it looks like a valid trade, but if any of these factors are off, then it could lead to a head fake. And then when people try it and they don't understand this, they think, well, this method doesn't work. It does work. It does work, and it helps me prevent head fakes, and I stay out of trouble every time I use it correctly. So let's get started. Now, I'm recording this live, but I am also recording this for the replay. So I'm going to pause the recording, and I'm going to set up the charts here, and we're going to look at some recent trades that we've executed with the trade copier. Now, this is the pound dollar, and this is the 1 hour time frame, and I am executing this trade on the MetaTrader platform, because again, if you're going to be using the trade copier service, it works on the MetaTrader platform. I'll talk about how it connects and how it sets up and everything, and how easy it is at the end here. So this is the 1 hour time frame, and if I want to trade a continuation breakout trade, this is what I was talking about, how subjective consolidation can be. So you can see how choppy it is. I mean, this is a pretty choppy pair. Now, if we compress this, or if we go to a 4 hour chart, we can see that that's a clear high, there's a clear low, and all of this is inside of consolidation. Everything here is inside of consolidation. I also take into consideration the weekly high and low, and this is obviously a pullback for the week, but they don't, those levels don't always have an impact. It really depends on when price reaches the week's high or low, and then you sit up, pay attention, notice how it's going to react. Now, inside of this range, so what we have here, this dotted line right here where I'm moving my cursor, that starts off and that identifies the start of a new week. So that was Friday's close. This is Sunday. I'm in California, right? The market opens on Sunday. So this is the start of the new week. This is Monday, and then it continues on. And what we see at this point, if we go back to where the start of the new week was, we can see that we've got the previous week's high, we've got the previous week's low down here. Well, price is about in the middle of that range. And then we had a pullback during the week here to a Fibonacci retracement level, just about the 50% there. Now, this is a support level right here, but if we move forward, if I'm looking for a continuation breakout trade, there's really nothing for me to do right here at this point. Even though 7 or 8 or 9 or 10 hours have gone by, there's nothing for me to do as far as the continuation breakout trade is concerned. If I want to make 55 pips, clean, easy, with no worry, this is my technique. There's nothing for me to do here. Now, should I consider a candle, should I consider trading a breakout if the candle closes below that support level? Absolutely. There, obviously, we can step back and we can say where the highs and lows are, but we need to identify consolidation right now. So if we used this high right here as the consolidation, so if we said here's the pullback from the previous week to that Fibonacci retracement level, and then it moved up and printed a high, why can't we use the breakout if a 1 hour candle closes above that resistance right there? This resistance right there where my cursor is. The reason is that here's actual resistance. We can go back a few more levels, and there's a few other resistance points here. And based on the entry, like if the candle closed above that high, if there isn't enough room for me to trade it for that 55 pip profit target, then I can't take it. And to me, this isn't the right range of consolidation anyway if I was to use that high. This is the previous week's high and then that pullback low. This is significant to me. Now, it may not be to you, and again, if you're looking at smaller time frames, you may be looking for other things, right? You might say, okay, well, why not this range right here? The start of the new week formed a new high, and it printed sort of a little tweezer there, if you can see that. 4 hours later, it retested that high. Why can't we use that high right there as a breakout range and trade it back up? Again, it's possible that it could work, but very often when traded inside the most significant support and resistance range, it gets really choppy, and even though I get the signals and they look like it might work, they fail. The continuation breakout trade, and this is something I've learned and developed myself, right, from looking at this pattern over and over and over again for the last 17, 18 years, is that I have to, it's critical that I know and learn how to identify the most appropriate high and low. Again, what makes this level more appropriate, this high and low, as opposed to the ones that we see right here, the more immediate ones? And again, going back to, well, obviously, taking into consideration the weekly high or low, in this case, the weekly high, that is a pretty important level. The weekly highs and lows, the daily highs and lows, the monthly highs and lows. These are significant levels. Right now, I have this available to me. The weekly high is available to me as a resistance point here that formed that high, right? The start of this consolidation where it dropped and then finally settled down here to form that low. This is appropriate. I know that it might take a little bit of time for you to look at it, and you might say, okay, well, what about all of the movement inside of this range? I'm not saying that there isn't a way to trade that. There certainly is. But the way that I trade it, I comfortably wait for these trades to set up one at a time. I'm not constantly changing. I don't have trades open every hour or every 30 minutes. I don't need to. I can trade a few times a few times a week and end up with 100 pips, 250 pips, 500 pips in a single week. Depends on how busy the market is and how many opportunities I get. And that's all I have to do. I just wait for these trades to set up. I have very few losses. If I experience a loss, I can always earn it back on the very next trade or two, and I don't have negative months as a result of doing just this, just waiting. Now, I have other strategies. I can trade this as a Tech 1 trade back up here, but we're not talking about that. That's another technique in my system. I can trade a Tech 1 trade off of support. I can trade the HL30. I can trade T2 patterns. All of these patterns and strategies I've created. But we're talking about the most profitable technique, which is the continuation breakout trade. And you can make a lot of money with just one of these techniques. So if I just want to execute the continuation breakout trade, I do nothing here until price breaks out of this resistance and support range. This is significant to me. This is very important. If it closes again and I start using some of these resistance points in here, in the middle of this overall consolidation range, they could lead to head fakes. How many times have you seen consolidation like this where you see a bearish or a bullish engulfing candle and then you think it's going long and then it rolls right back over and you get stopped out? Happens all the time. That's what usually happens inside of consolidation. But you have to be able to identify consolidation correctly. Sometimes you have to go to the larger time frames to know that this is the right high or the low. Sometimes you have to look at the 4 hour or the daily chart. You see clues there. Not always, but when appropriate at that time that you're looking at it, it may give you that opportunity to identify that. So we're going to take this out a little ways. You can see how it closed up above that resistance point in here, moved up a little bit, and then it sort of collapses. It doesn't go 55 pips in here. There isn't 55 pips. So again, back to that strategy, I wanted something that I could duplicate. If I could see the signal, but it's not going to hit the 55 pip take profit level, well, then I have to change it and make it a different strategy if I'm going to take 20 pips or 17 pips or 18 pips. You see what I'm saying? I can't duplicate it over and over again if I'm always changing the take profit level. That's not something that I can repeat. And it doesn't help eliminate the stress that's involved in waiting for a trade. Very often when I'm looking for a continuation breakout trade, when I identify the right high and the low, I set price alerts and that's it. I know that I don't have to stress out and be sleep deprived because I'm sitting here watching the charts over and over again for years and years and years on end to make money. I just wait for the alerts to go off and then I take my trade. So this one would not have hit the 55 pip take profit level. And we have no idea where it's going to go now. Now it's just stuck in this range of consolidation on that pullback. Well, ultimately it ends up going right back up to that resistance point. So now I'm much more comfortable waiting and watching the reaction as it reaches this resistance point in here. Either the previous week's high or that pullback low. This is my consolidation range. Now I'm going to be paying attention when it approaches that range. Is it going to be a reversal off of resistance, or is it actually going to close above that resistance point, print a continuation breakout trade, and then I can trade that? So let's go ahead. Strong pullback on some news, but does that mean a full reversal where it's going to come all the way back down here to support? We don't know. Bottoms out, turns around and goes back up again. This is getting pretty choppy. There is some money to make here. If I was to trade this as a Tech 1 trade off of resistance with the news, I would be scaling out at psychological levels. You'll see me do that if you use the trade copier. You'll see me execute different techniques, not just the continuation breakout trade. Remember, in this example, I'm just sharing with you how I use the continuation breakout trade. So, I'm sorry, gave it all away. So, following a little bit later on, then we get a news event that drives price all the way up and through and above that resistance point. This is my continuation breakout trade. That's the one I've been waiting for. Again, I'm not saying that I don't have trades to execute in this consolidation range. I do. But for the continuation breakout trade, this is how I trade this. This is news driven. Very often with the news is the driver, right? I would rather trade in most cases when the continuation breakout trade when I see this set up like this. So let me explain a few things that are going on here. Very often, if this sets up during the New York session, let's say, or the London session, when there's more participation, like I would be suspicious of this move if it happened during the Asian session. What I mean by participation is there's more volume. New York session, obviously there's more people trading that session. And I am less susceptible when I get into the trade to see a negative retracement, meaning against my position. So let's go ahead and I'll walk you through this and I'll explain what I mean as we're moving this trade along. Remember how I said that as price is moving through that resistance with the news, it would have been great, right? To say, okay, let's say this is a 9 o'clock candle, just for example, and it's 8:52 and you see it moving through and you think, okay, this is it. And you just go ahead and you take the trade anyway, thinking, oh, I'm going to get a better entry. If this is going to be a continuation breakout trade, I'll trade it to 55 pips after it closes. But I'm going to get in now. That's not a good idea. Don't do that because it could have dropped down and below this resistance and then ended up closing underneath that resistance point, printing a head fake. So don't do that. I have to wait. Now, I know how tempting it is to watch price go from 97 to 20 to 42 to 60. You're probably screaming to yourself, wow, there's like 50 pips in there, dude. Why didn't you take that? And I remember thinking that to myself. I would think that. I would think, okay, well, but how many times have you got into a news trade where it moves up and it looks so strong and you think, wow, this is it. Like I'm going to be in this huge move. It's going to be like a roller coaster. I'm just going to ride it one direction. I'm going to make a lot of money. I know because I did that. And then it ends up collapsing and it turns around and drops right back down. That happened last week, later on in the week. We got in, we saw a trade. We didn't get into the trade, but we were about to get into a trade. We needed to wait for confirmation. The news created the spike and then the whole thing collapsed and went the opposite direction. Those events happen and I'm trying to eliminate those. I often say that I want to be right 100% of the time. Now, when I say that, sometimes people will give me this look like, well, you don't sound like a very experienced trader. That sounds like somebody who's just, got a lot of different ideas about things that don't make any sense. Let me clarify. What I mean by that when I say I want to be right 100% of the time, I know I'm going to experience some losses. But what I stand for and what I believe and what I the way I control my environment, my behavior, my reactions, and my dedication to following my trade plan means that in order for me to be right as often as possible, I have to have all of these things in place and I cannot break those rules. I need to be ready for this. I need to be ready when the market throws you a curveball, when it does something unexpected. Can you process that information? I need to be ready. I need to be ready 100% of the time. I want to do everything that I control. The only thing that I can control is myself. I cannot control the market or the behavior, the reaction. of traders collectively. I can't control any of that. All I can do is control my behavior. And I want to be right. I want to do the right thing 100% of the time. That's what I mean. By doing that, then I'm going to let go of some of these risky trades because I know they're risky. I've tried them. I know that sometimes when price is rallying like this, you might be lucky and it might continue to go higher. And you might make some money if you just happen to close it at the right location. If you don't have a take profit target, and I know I say this because I did this. If I didn't have a take profit target, but I got in when when the price was moving on a news or something like that, and it looked like it was going to keep going, sometimes it keeps going and you get lucky and you go, wow, I got 22 pips. I'm going to close it. I'm good. Sometimes it's 31 pips. Sometimes it's 17 pips. You're changing it all of the time. You're changing your target. How do you hit a moving target? Makes it harder. By me doing this and waiting for this structure and waiting for it to give me the confirmation, now I know I can trade this to 55 pip take profit level and not have to worry about anything else. I know what to do here. I know where my target is. I know I can hit it. I won't take a trade unless I know where my take profit level is. It's the same thing. I use the analogy, it's like hunting. Sometimes you got to wait for it to move into your crosshairs and then execute. And you know you're doing the right thing 100% of the time. That's what I'm talking about when I say I want to be right 100% of the time. I know I'm going to have some failed trades, but by executing and trading this way, I know I'm going to have very few failed trades. And the failed trades that I have, I can earn them back right away. And I'm not worried about it. When I first started trading, I lost so much money and I had no strategy in place. And I thought, oh my God, I lost so much money. How am I going to make this money back? Like, what am I going to do? How is it even possible that I could make all of this money back? Like, I didn't even know where to start. And if you're experiencing that, this is part of what causes a lot of that. You don't have consistent take profit targets. You don't have a stop loss that you've measured and calculated will keep you in this trade every single time you do it correctly. So once I have that close completed candle, I look at 3 indicators. The first one is the Bollinger Band. The first indicator, not the second, not the third. The first indicator that I put priority on, top priority, is the Bollinger Bands. The Bollinger Bands absolutely have to be separating away from each other on that breakout candle. That shows a sign of strength. If they're not separating away from each other, I would be suspicious of this move. So let's say on this move like this, the top band, you can see it right there where I'm moving my cursor. The top band is pointing up, but the bottom band, let's say, for example, was curling and pointing up too, following it along. I would be suspicious that this would be a head fake. The next indicator I look at is the CCI. There cannot be any divergence here. And then, of course, the MACD histogram, you can see it's the first positive MACD histogram that's rolled over from the negative side. Sometimes that one will lag, the MACD histogram. Now, that's the signal candle, but that's not the entry. I have something else that I did to help me prevent getting into these head fakes, because sometimes price will close like this. It looks great. It's economic data. And then the next candle, there's more economic data. Or then there's some analysis and price goes boom and drops right back down into that consolidation range. And then it turns out to be a head fake. So how do you prevent that? That's my problem. That's what I went through when I first developed this method. So there was all of these different methods. I had to test these different indicators, had to identify what they were doing, whether I was using the right indicators for a technique like this, had to figure out where to quantify and how to qualify consolidation, where was the breakout, what time frame to use, all of it. Now, that's the signal, but again, that's not the entry. What I realized was that if I need to wait for price to take out that high, but how far? How far does price need to go above that high so that you can have additional confirmation that the trend's going to continue in the direction of the breakout? Because again, sometimes we see them and they're just like this. It closes right at the high and then the next candle opens up and drops and creates that bearish candle and the whole thing reverses. So I need to stay away from that. When I first developed this method, I was using a 10 pip entry, which meant that price needed to take out the high on the next candle 10 pips above the high of the signal candle. This is the signal candle. That high is 1.2965. So that means I had to wait for price to go to 1.2975 before I can get into the trade. And that worked. But what I realized is it was eating into my profits. Because if I was going to hold for a 55 pip take profit, I was adding more distance to it. And it wasn't going to fit, if you get my point. Just because I get in and want more, or I pick a different level to get in, I still have to pay attention and respect the distance that price has already moved based on the range and the time of consolidation, how long it's been in that, all of it, all of this, all these factors, the Fibonacci extension targets from previous levels and previous weeks and 4-hour charts and things like that, all of it has an impact on it. So 10 pips was eating into, the 10 pip entry was eating into my profits if I was going to use a 55 pip take profit level. So then I went down to a 7, then I went down to a 5, and then I realized that 3, and I tested this for a long time before I knew it would work, 3 pip entry is perfect. If it's going to be a head fake, very often it'll move up 1 or 2 pips and then turn around and go right back down the opposite direction. And this 3 pip entry rule keeps me out of trouble. And I don't go long if it turns out to be a head fake. And I never go long. It's an awesome feeling to be able to have these multiple strategies. This is what I was talking about, the nuances. If you take this information and you think, okay, I got all the details, there's a lot of details behind it. Because remember, just because you see it setting up, what about all of these other factors, right? What about all of these other things? I also incorporate pivot points and things like that to determine if it's going to be a head fake. So here's my 3 pip entry. We're going to go back here to 65. So 68 is my entry, 1.2968. And I'm going to use a 55 pip take profit level. I think this was supposed to be at 1.3023, but 20 is a psychological level, but you'll see what happened in here in just a moment here. So we're going to take this out. Let me go ahead and we're going to take this out another candle. So the next candle opens and goes down as low as, and we're using a 55 pip stop loss. So from 68, it went as low as 42. So we were negative probably 25 pips on the pullback. And this is pretty common. Pay attention to what's happening. So when you see a pullback like this, if it goes down 25 pips, don't panic and think, okay, well, this isn't going to work. I got to close it. That's what people with inexperience are going to say. And remember, I said sometimes I can take minus 27, minus 25, minus 17 pips if it's not going to work. But there was nothing to indicate that this wasn't going to work. This was perfect. There was news. There was the signal. There was a closed completed candle above the previous week's high. Everything was lining up perfectly. No doubt in my mind. And the retracement is not uncommon, especially if it is a breakout like this, where price is just going to retest the level that it broke out of. And I think that to myself as I'm watching this unfold. Don't stare at the price and the number and the dollars in your trading platform, how negative you are, and don't use that to determine where you should close the trade. I know I'm going to be using a 55 pip stop loss. I'm prepared to take the hit if it doesn't work. If I calculate before it hits the 55 pip stop loss that it's not going to work, then if I made a mistake, then I will close the trade. But in this instance, I made no mistakes. I knew where it was going. And it's not about putting my ego into it and saying, okay, well, I know where it's going. I did everything I was supposed to do. I've done it like this since 2001. I know it will work. I know how it works. It's based on solid market principles. The market is reacting to economic data. The market is reacting to these key resistance points, the weekly highs and lows, all of it it's reacting to. And I'm incorporating all of that information into this one single trade opportunity, and then paying attention to how the market reacts to it. Watching price, watching comments, watching volume levels is also important. Let's take this out a little bit further. It stalls a little bit and then hits our take profit level. I think right on that candle right there goes up as high as 27. We earned 55 pips on this trade. One of the things I want to go back to though is this. When some of my students see this, they'll say, okay, Joseph, let me ask you something. This was a huge move on the news and it's already covered 60, 70 pips. Aren't you afraid that even if you get your entry on the next candle, that it's going to retrace more than 55 pips because of the distance it's already covered, and then maybe later turn around and go back up? And yes, that is a possibility, but it doesn't happen when everything lines up like this correctly and it's with the news. So I'm incorporating the news as also another indicator. I know what was driving this. I wouldn't look at a candle like this and say, well, I'm just going to get into it, and not know what it was or what could be released, what data would be released afterwards. Everything has to be lining up correctly, and it doesn't pull back. If this is a good working continuation breakout trade, a valid continuation breakout trade that's going to reach that 55 pip take profit, if it wasn't going to work, then I would see it based on the retracement too. It would also go really deep, like you could tell. If it's going to work just like this one did, a normal, healthy retracement pullback is about 25, 27, sometimes 32 pips, and then that's it, depending on where support or resistance is, if it's going to retest it. That's it. And then it turns around and goes right back up in the direction, or right back down in the direction that you're trading it to. This is my continuation breakout trade, and this is the one that makes a lot of money. Yes, we traded this with the trade copier. I also did the same thing with the euro yen, trading it using a 70 pip take profit level to the downside. And we do the same thing with the trade copier service. But it's just the tip of the iceberg. There are countless opportunities to make money in Forex, and I want to personally help you implement this system into your daily trading routine. So you have been watching this webinar with me now because you know you need a solid, robust trading system in place that will allow you to safely make money. And that's why I developed the best Forex Trade Copier service. It's the same program that executes trades built on my experience since I started trading back in 2001. Now, the best Forex Trade Copier, it's all about making and getting great results for my subscribers. You can use the Trade Copier with a live account or a demo account, and you can turn the Trade Copier off anytime you like. You can log in to see trading results, the stats, anytime. You can do it from your smartphone or from your desktop or laptop. You can also execute trades on your own, on your account, at the same time that I'm executing trades for you if you want to. You can do that. I do have some subscribers that set up trading accounts and let me trade exclusively for them, and then others want to trade the same account. The Trade Copier will also work with any MT4 platform, with any broker, around the world. It will work with 4 and 5 digit brokers. It has a setting so that it will detect that and the suffix. And it will also work with brokers that use extra characters. Again, that's the suffix or the symbol. Now, these are some recent stats. This is for the best Forex Trade Copier, people who have used my Trade Copier program. And, you know, many of them are either supplementing their income or they're using it while they're learning how to trade. So the best Forex Trade Copier has been an evolution process since July of 2007. And this particular program has helped my personal students earn the following results. Now, you can see here that this was a relatively small account, a $10,000 balance. This will give you a really good idea of how much money you need. Because very often I get that question, how much money do you need to make this work? This subscriber earned, in just less than a month, a 59% growth as a result of using my Trade Copier service, me executing trades for them. You can see their total profit there, $3,091.34. This is another subscriber that earned and had a growth factor of 364%. You control the lot sizing and the leverage. And all of this took place in just a few weeks. Now, I don't recommend using extremely high leverage. I really don't. I caution everybody. But I cannot stop you. When you log into the trade dashboard to connect your Trade Copier and your MT4 account, you set up the leverage and the lot sizing that you want, that you're comfortable with. The only thing that I do at that point is trade for you. I open and close and manage all of these trades. This is another subscriber, and they experienced a 183% growth rate in just a few weeks. And again, I don't recommend using leverage that's high like this. But many of my subscribers, after a few weeks, they grow to trust me as a result of watching my trades come into their account. Because again, you can add a demo account for the first few days or first few weeks to the trade copier, and then later on switch it and add your live account. And once they do that, they've trusted me, they know what to expect, even with some of the losses, they're comfortable with it. So then they adjust and increase the leverage and the lot sizing. And again, I caution everybody, and please take some time to understand, if you don't understand the impact that using high leverage will have on your account, take a moment, go to YouTube and type it in. Do a little Google search on, leverage, proper leverage for Forex trading, things like that. You'll find a lot of different examples that will show you exactly what to use that's appropriate. Now, some email testimonials from other subscribers. I recently received one that read, really great stuff. That was the subject line. The email read, just wanted to drop a line and thank you for the material that you sent me the other day. You really didn't have to do that, and I really appreciate it. You're one of a kind in this business. One of the good guys for sure. The new material really is really fantastic. Last night I traded just one of the setups you showed, and on 3 different pairs, and made over $2,000. This student now uses the trade copier to execute trades just like this without him ever having to execute a single trade. He started off trying to trade himself, and then eventually just set up his trading account so that I exclusively trade the account for him. Another testimonial came in and it read, Dear Joseph, thank you for your reply. I appreciate it a lot, and thanks for all of the trades that are popping in positively. I just woke up with $974 USD profit with the Euro Yen trade that you took. I finally found an honest signals provider. Another message came in, another testimonial was, Joseph, I'm one of your new subscribers. I just started using your service after you changed it to a monthly service, and I can't tell you how happy I am. Since Friday, May 22nd, you made me just a little over $923 in my real account. I know that I should be prepared for some losses, but this is fantastic, and all of this in 3 trading days. I am looking forward to more. This was some feedback going back and forth with one of my students and through email, and it's just a line that he had mentioned in an email. In case you're wondering how it's going to work in the future, this system has a proven track record. It carried me and my subscribers through the global financial meltdown and every other crisis. So he had mentioned that, I must say, I'm impressed that your trading methods haven't changed much in all of these years, and that says a lot about the methods, meaning my trading system. These are my results and the results of some of my students, and my results and their results are not typical and are to show you the power of using a proven system like this. I'm not guaranteeing that you or anyone else who watched this video and tries to use these strategies will experience the same results. This program requires action. You will either need to learn these strategies forward and backward like the back of your hand to know how to use them correctly, or use a trade copier service like mine and let me execute these trades for you. This is the simplest and the most profitable trading system I've ever seen and used since 2001, and I want to personally help you implement it, but it's not for everybody. There are some requirements. This is an exclusive offer for MT4 traders only. It won't work on any other platform other than the MetaTrader 4 platform. It's best used for traders who can execute one standard lot. Now, I cannot force you, of course, to trade and use one standard lot. Some of my subscribers are using mini lots. Other subscribers are using, for example, 0.5 lot size. But because of the subscription, because of the total dollar amount of what it costs to use this subscription, it is more cost effective for people who can use one standard lot. I would like to see everybody eventually get to one standard lot, because again, on the euro dollar, 1 pip is $10. I mean, you're making really good money at that point. This is a monthly subscription service. Because of the monthly price of this trade copier and the subscription price, it's recommended for traders, again, who can execute at least one standard lot, just to make it more cost effective. But you can use it with a lot size less than one standard lot. That's up to you. It's totally up to you. It's whatever your comfort level is. So in closing, if you've lasted this long into the webinar, then you probably realize that you really want to succeed as a trader in this business. And you are tired of not earning what you truly believe you are worth. I have really good news for you. You deserve to earn what you feel you're worth. And for many of you, it is your obligation to earn what you're worth for the benefit of your families. We all at one point or another We learn that we have to overcome fear in order to get what we want or to succeed at something. And to make money as a trader, overcoming fear is the only way to succeed. Having someone in your corner who supports you and can help you will make a huge difference and can literally change the outcome for the better. We will all face the question, should I continue with this dream or should I walk away? And I have to wonder where I would be today if I didn't have my support team in the beginning. Now more than ever, you need to provide yourself and your family with financial security and to take matters into your own hands. And I would be honored to help you and be in your corner. If you would like me to help you perfect your ultimate trading lifestyle that will provide you and your family with stress-free abundance and to earn what you're truly worth, I would be more than happy to help you do so. You can sign up using the URL below or the one that I'm going to type in here in the chat box. If you're watching this as a recorded video, you can click the button just below this video and it'll take you straight to the sign up purchase page. This automated trade alert system will help you achieve your goal. My goal is to get you to your goal as quick as possible and getting you to live a life of stress-free abundance, knowing that you're providing for your families and yourself. So I'm going to take some questions here. Actually, I'm going to take a quick drink of water in just a moment, and then I'll start answering some of these questions. When your payment comes in, so you have access to a membership site, and then in that membership site, you watch one short video that shows you exactly how to connect your trade copier, and then you get the link straight to the dashboard, and you set up your account in the dashboard, and you add your MT4 account to it, and you're off and running. Like, it literally takes just a few minutes to set up the whole thing. It's super easy. How much money do you need to make this work? You mentioned, okay, so yeah, I did mention that in the beginning. So I mentioned it is true. You don't need to add any more, but I get results. I get results from my clients. You saw the performance stats. These people are making 30% return on a month. They're making 100% return on a month. Again, I don't recommend using extremely high leverage like that, but consistently, why wouldn't anybody be happy with 8 to 10% return every month? I'm managing these trades. So again, it's, if you have a $500 trading account, that's all you have in the balance of your account. I can't say no to you, of course. I would prefer people to use the trade copier that can see big results. I want them to really see healthy, happy returns because I can actually see how much money I'm earning for you when I log into my dashboard on my end. And that motivates me. That makes me happy. Like, I think, wow, my subscribers are counting on me and I need to make the money. That empowers me. That keeps me going. That drives me. And I know that there are other people, my subscribers on the other end of those trades, counting on me with families, and they're hoping to fund retirement, or they're maybe that transition of getting out, or maybe they're already retired and they're trying to get out of a job. Whatever the case is, I know people are counting on me, so I can see all of that. And again, based on how much I charge for the service, it's more cost effective, obviously, if you're going to be earning like $5 a pip or $10 a pip. So you can sort of do the numbers yourself. And but you can certainly. I do have some subscribers that start off with like a $2,000 or $1,500 trading account, and they want to see how it works. And then if it works for them, then they'll put more money into their trading account. So you can certainly do that. There is no limitation. I won't limit you. There's no maximum or minimum to use the service. It's just, again, more cost effective if you have more money in the account because you'd be able to use a larger lot size, but safely, right? Appropriately. Why is the cost of your trade copier so high? I personally execute these trades. I take my trading very serious. I control my environment. I don't drink. I don't smoke. I don't do drugs. I work out. I eat healthy. I sleep. And I trade. That's what I do for my subscribers, and that's what I do for my family, and that's the benefit of my trades, right? And my trading benefits from me controlling my environment and my behavior. But what I'm getting at is that I control my environment. I am a full-time hands-on professional trader. I watch the markets. I read the news. I manage each one of these positions. I don't get up and walk away from these trades when I open them. I don't open up a trade and then go to sleep. I don't do anything like that. I need to watch these trades. I manage these trades. If something goes wrong, I want to be there so that I can minimize the loss that we would experience if we are going to experience a loss. And then I need to confirm each and every single one of these trades. And I already explained, sleep deprivation. We talked about that. Being fresh, being controlled, being in control of yourself, your environment, all of it. My family has adjusted to my lifestyle as a trader going all the way back to 2001. We had no idea in the beginning what it was really going to be like for me to be trading around the clock. Forex is 24/7, 5 days a week. And obviously there are times when you can clearly see that it's going to be slow and flat and there's nothing to do, right? I get that and I see that. And I time even my sleep usually around a lot of that. But again, this is full-time work. This is effort. This is constant going at it and analyzing the charts, the markets, the news, comments, all of it. And it's me trading for you. I work for you. This is like the cheapest price that you're ever going to get, with results that are as close to anything possible that would resemble a managed fund. And I'm not saying that it is, but I'm saying very, very similar, the results, with having somebody personally trade for you. Do I include education with the trade copier? So I do give you you have access to a membership area, and I make update videos and things like that, and I post them in the membership area. So I walk through and review trades. So if I have like a continuation breakout trade, people know that it's a continuation breakout trade. My subscribers do, and then I'll make a video about it. And I also offer my trading manual and with the subscription. So there is a little bit of training with it. It's not followed up training, because most of the people that use the trade copier, they just want me to trade for them. They just want to make money. What currency pairs will this work on? Can you set the so I think you're asking about can you specify which currency pairs the trade copier executes trades on? Absolutely. When you set up your trade copier and you go into the dashboard, one of the final pages, just as you're getting ready to save all of your options, there's a list of all of the different currency pairs. Way more than the majors. I think there's like 23 or 24 of them, something like that. There's quite a few, and you can put a checkbox next to the ones you don't want those particular currency pairs to be traded. So even if I execute it on my end, it won't for you if that's what you want. Yeah, there's a lot of control with this one. Can you set up the lot size to? Yes, you can set up the lot size to whatever you want. You can set it up to a micro, you can set it to a mini, standard, whatever it is that you're comfortable with. Can you change the stop loss? Yes, you can change the stop loss. You can put a maximum stop loss on the trades, and you can also put a maximum take profit on the trades. But this is what I recommend. If I state that I use maximum 55 pips stop loss on all of my trades, if you change it for whatever reason, and you say, okay, well, he says sometimes he doesn't even have to use a 55 pip stop loss, so I'm going to change it. So if you change it to 25, but I just happen to, on one of these trades, it just, the reaction goes to like minus 32 pips, and you set it at 20 or 25, you're going to get stopped out, even though the trade turns around and goes back up to the take profit level. It's possible that could happen. So I would recommend, when you connect your account, just for an added layer of security, set in a maximum stop loss of 55 pips, because you know that that's what I'm doing. That's what I would do. But again, I haven't had a 55 pip loss on a trade in probably 2 years. So it's something that, again, it goes back to me managing and controlling each one of these techniques. Will it work with my broker? I don't know which broker you're using. You could type that in and we can check. But yes, usually if they offer the MetaTrader 4 platform, it will work. Can you cancel? You can cancel, but so if you look at the purchase page, there is a refund period, but it's during the first 24 hours. So this is a commitment on my end, and with all of my subscribers, it's a commitment on their end too. So they trust me, they like me, and they want me to trade for them, and they know what I'm doing. They know that I am living a certain way so that I can work for them. I am working for them. There are days when I have to put in 12 to 16 hours. There are days when there's nothing to do. Even though I put in 10 to 12 hours and there's no trades, it still takes as much time to analyze the markets and the charts and to know that I don't have a trade as it does to identify that I do have a trade. It's the same amount of work. They know how hard I work for them. And yeah, so I think I know what you're saying. So yes, that's right. The first 24 hours. If for whatever reason you decide, it's not for me, I changed my mind, yeah, that will all take place during the first 24 hours. After the first 24 hours, though, after you purchase, I'm on my way. I start trading for you, and I don't turn back. Is it easy to connect your live account after the demo account? I think you can add your demo account for the first week or two or three or first month, whatever you're comfortable with. Once you're comfortable, the same process that you went through to add your demo account, that's the same process you use to add your live account. You just delete it. There's a little trash can next to you'll see the line. It's just a little trash can, and you'll just click delete. It'll trash that account, and then it'll give you the option to add your new one, your live account, to it with a new your username and password. No, I do not have direct access to your trading account. I do not. I can't touch your money. I can't take it out. I can't do anything other than trade for you. That's all I do. This is a web-based platform, and you can close your computer or turn it off or whatever, and you still will get every trade that I execute. There's no VPS that's necessary. You do not need to set this all up on a VPS service to make sure you don't miss any trades. This is hosted on the company that provides us the Trade Copier service. They're all on their servers. They manage everything. They're great with customer service. That's the other thing that I really appreciated about using this Trade Copier service. Not only is there total transparency and a robust statistics dashboard for all of the trades. You get to see all of my trades. It's great. Pie charts, graphs, all of it. Breakdown trade by trade. I love it. Anyway, they're also very, very helpful. If anybody experiences anything weird, or they can't connect for some reason, if they're just not getting it right, they're really helpful people. And they've always answered my questions like within just a few minutes after me sending an email to them. So the customer support is great too. Yes, we are available to help you set it up, but it's really, really simple. Like, it's a lot easier than any other trade copier we've ever used. There's nothing to download. You do not need to download anything onto your computer. You get a link, you go to the dashboard, you set up your account by typing in your name and your ID for your MT4 account and the password. And then you add which broker it is, and you go along with the settings. It's very, very fast. Yes, I do have instructional videos for this in the membership area. Access is right away. Yes, we don't stall anything. How long will I be trading? You mean, probably how long am I going to be offering the service? I'm going to be trading until I can no longer see the charts. I'm relatively young, as I say, and I'm going to be trading for the rest of my life. I love trading. That's the one primary thing that I want to do for the rest of my life. Yeah. So anyway, as far as a trade copier, I will be offering this trade copier for as long as trade copiers are an option to offer my subscribers. I mean, if sometime in the future the world bans trade copiers, then obviously I won't be able to do it. There'll probably be something else that people will come up with, and I'll end up using that. But I'm going to be offering this trade copier. I've been offering it since 2007, so I have no intention of stopping. Yes, I am the only one who executes these trades. Nobody else does, and it's not an automated system. When I say that it's an automated Forex trading system, it's automated to you, meaning that it's hands-free on your end. But the system itself that generates the signals and tells me when to get in, when to get out, I am the system. I'm the only trader. I do this to make it exclusive, definitely, absolutely. I don't want my trade copier service or automated system service to be, I don't want it to be compared to the other ones that are out there. I know that there's a lot of garbage out there. I get emails from people all the time. They use my service for about 2 or 3 weeks, and then they say, I can't believe it. Like, I can't believe you haven't blown up my trading account. And they'll tell me their experience in the emails. They'll say, I was using another service, and in the first few hours they had 27 trades, and then by the end of the week they were down 150 pips, and they don't use stop loss and all of that. And I know that stuff is out there. I know that there's a lot of garbage services out there. They're inexperienced traders. They shouldn't be offering trade services, but how do you qualify them? How do you get them out of the way? They've been around since I've been in business. They're always going to be around. It's not going to stop. I really want to keep it exclusive, and I want to be able to. I want to know the people to a certain degree. Like, I get to know a lot of my subscribers. They'll send me some feedback during the week, or they'll tell me their story in the beginning, and then I get to see them on that dashboard. I know that they're still connected. I know how much money I made them for the day, and that makes me feel great. Like, I feel I know and I appreciate how much money I make personally as a trader. I like that. I love that. But over the years, I see it, but I don't focus. That's not my real main focus. My focus is on my subscribers and seeing their names on the dashboard and knowing that I'll look at how much money I'm making for them, and that excites me. And sometimes I won't pay attention to how much money I made for myself for the day. Like, obviously I see it and I know how much money I need to make, but you get my point. After years of doing this, my shift has really been more about, yeah, I mean, even if it's $1,000 I'm making for somebody in a week or a day or something like that, and I see their name, I think, wow, that's great that he just made that much money. And I'll say that to myself or think that, and it's that's what I enjoy. That's why I offer the service. That's why I enjoy doing it. Yes, that's the best. That's the best email account right now. The best Forex Trade Copier at gmail.com. Yes. Okay. Thank you very much for attending. I really appreciate all the time that you spent with me. I hope that my explanation of the continuation breakout trade made a lot of sense, and you really got to see, the insight. And I think it's important that you get an idea of some of the things that I'm going to be doing for you when you use a trade copier. But again, the trade copier will make you money. I don't have any losing months, and I've been trading since 2001, so I know what I'm doing. I know what I'm doing, and I work very, very hard at it. And I know that you're counting on me, and so are all of my subscribers, including my family. Everybody does, and I appreciate that. I know it comes with a great deal of responsibility, and I don't take it lightly. As I said, I control all of my surroundings. I manage these trades, and I don't turn my back on the trades. So again, I look forward to trading for you.